So our group take Mfrs company as example of the company. The Mfrs company is founded in 1993. Their headquarters is located in Kuala Lumpur, Malaysia. They are focused on telecommunication industry. Service offered by them is mobile plan, which is postpaid and prepaid, broadband 4G and fiber, and digital services for individual and businesses. Market presence is nationwide coverage in urban and rural areas, and their company is listed on Bursa Malaysia. Innovation made by them is pioneer 4G technology in Malaysia, expand the fiber broadband infrastructure, and reputation and focus. Their company is top telecom company with a customer-centric approach, focus on connectivity, innovation, and digital transformation. The impact is key player in enhancing Malaysia connectivity and technology adoption. For the mission of the company want to unlock the potential of everyone through connectivity solution, and vision of the company to bring advanced communication services that enrich the life of customers and businesses. What is operating segment? Operating segment is a component of the business that earn revenue and incur expenses, and it also has its result reviewed by the CODM and has decreed financial information available. Based on Mfrs 8, an entity should disclose information to enable user of its financial statement to evaluate the nature and financial effect of the business activity in which it's engaged and the economic environment in which it's operated. Operating segment is a component of an entity. First, the engaged in business activity from which it may earn revenue and incur expenses, including revenue and expenses relating to transaction with other components of the same entity. Second, post-operating results are regularly reviewed by the entity chief operating decision maker to make decisions about resources to be allocated to the segment and assess its performance. And the last one is for which discrete financial information is available.
CODM is a key concept that refers not to a specific job title but to a function within the organization. CODM is the individual or group responsible for making strategic decisions, particularly in assessing the performance of various business segments and deciding how to allocate resources among them. This role could be filled by a CEO, managing director, or a committee of senior executives, depending on how decisions are structured in the organization. Identifying the CODM is essential because segment reporting under Mfrs 8 is based on the internal reports reviewed by this decision maker. Okay, let's begin by looking at the leadership team involved in the implementation and oversight of Mfrs 8 segments reporting within the company. First, we have Goh Siu Eng, the Chief Executive Officer. He leads the overall strategic direction of the organization, ensuring that all the segments are aligned with the company's objective and regulatory compliance. Next is Jennifer Wong, the Chief Financial Officer. She plays a key role in preparing and overseeing financial reports, including segmental disclosures required under Mfrs 8, and ensures they meet the standards set by financial regulators. Third, Mariam Devi Binti Bacha, the Chief Corporate Affairs Officer, is responsible for managing stakeholder communications, corporate strategy, and compliance, including ensuring transparent reporting practices are followed. Lastly, we have Ng Mei Ching, the Chief Information Officer. She ensures that the company's information systems support accurate and efficient data collection and reporting, which is critical in segmental reporting where data is often derived from multiple business units. There are two main types of segments. First, business segments. These segments refer to divisions within the company that offer individual products or services or group of related products or services. Each business segment is exposed to different risks and returns compared to other segments. For instance, mobile services and enterprise connectivity services might have very different cost structures and market dynamics. Second, geographical segments. This is based on economic environments. It involves the provision of services or products in specific regions or countries. Different geographical locations might present varying operational challenges such as currency risk, political stability, and customers' preference. Consumer segment include fast internet services targeted at the general public in Malaysia. Its offerings include 5G plans, innovative postpaid package, and fiber convergence solutions. This segment focuses on high volume, standardized services and is heavily consumer driven. Then we have the enterprise segment. This segment caters to SMEs, corporate client, and the public sector. It includes contract for multi-year connectivity and digital solutions. This segment is more relationship-based, often involving custom solution and long-term services agreement. Both segments operate under different market conditions, cost structures, and revenue models, and it needs to be reported separately under MFRS 8 for better performance tracking. This diagram presents the company's performance by segment as at 31 December 2023 and compares it to the previous year. The segments are divided into consumer enterprise and other revenue. As we can see, the consumer segment generated RM 7,064, showing a slightly growth of 3.7% compared to the previous year. The enterprise segment showed a stronger growth of 6.4%. Other revenue grew the most with a 10.7% increase. This kind of breakdown allows the CODM to assess which segments are performing well and which might need strategic attention. It is also essential for external users to evaluate the company's operational focus and risk exposure by segment.
Segmental reporting involves breaking down a company's financial results by business units or geographical areas. There are two key benefits. First, it enhances transparency. Segmental reports give users a clearer view of how different parts of the business are performing. You can see revenues, profits, and other key metrics for each segment. This improves understanding of the company's overall operations. Second, it supports improved decision making. When management can see which segments are performing well and which are not, they can make more informed strategic decisions. It's not just about the whole company, but how each piece of the puzzle. Now, let's move on to MFRS 134 Interim Financial Report. Standard applies to financial reports that cover periods shorter than a full financial year, such as quarterly or semi-annual reports. The purpose of MFRS 134 is twofold. One, it ensures that users receive timely updates on a company's financial position and performance. Two, it supports market efficiency by providing up-to-date, relevant information more frequently. In Malaysia, MFRS 134 is mandatory for listed companies under Bursa Malaysia rules. These companies must submit quarterly financial reports within 2 months after the end of each quarter. In terms of content, at a minimum, companies must provide condensed financial statements such as the statement of financial position, profit or loss, cash flows, and changes in equity, plus selected explanatory notes. Comparative figures from previous interim and annual periods must also be included. MFRS 134 also emphasizes key disclosure areas such as consistency of accounting policies, significant changes in estimates or unusual items, events after the interim period, and material segment information. Finally, if there are changes in accounting policies during the interim period, companies must assess materiality and restate prior periods where necessary.
So next, there are two significant events that will affect Mfrs Berhad financial statements and performance. The first one is the adjustment of an asset lifespan. In 31st December 2023, there is a change in the asset useful life in certain telecommunication equipment and software, which resulting in 168 million increase in depreciation and amortization. This will cause the earning before income tax and profit before tax to be lowered. The second event is the issuance and prepayment of borrowings. Mfrs Berhad had issued an Islamic medium-term notes of 1.4 billion ringgit for capital expenditure and prepaid of 1.44 billion ringgit of commodity murabahah term financing. This event will improve the debt structure, however, it will affect the cash flows coming from the financing activities. As shown in the slides is the current and the comparative interim period for each statements. And for your information, comparative periods would be the previous year. For statement of profit and loss, the current and the comparative period would be the interim period of 3 months, starting from 1st October until 31st December, and also the 12 months ending starting from January to December. Statement of financial position, the comparative period would be the ending reporting date of the previous year, which is the 31st December 2022. And lastly, for statement of changes in equity and the statement of cash flows, the reporting date would be 12 months starting from the 1st January until 31st December.